Good evening. You're tuned into Business Day right here on ET Now. I'm Avan Dabash. A quick snapshot as to how the markets panned out this Thursday before we take you through the top headlines. Well, it was a fairly sluggish day of trade and we were below the 59.50 mark by the day's close. The market breadth too reversed in favor of the losing side, and broader markets, they witnessed quite a bit of selling pressure. So by the day's close, it was 59.38 on the Nifty, down by 20 points. For the Sensex, we shut sharp at 19,580. That's down just about 60 points. We get you all of the top stories after the headlines. The government lowers the growth forecast for the current fiscal to 5%, the lowest in a decade. The Central Statistical Organization blames the dismal farm output and the slowdown in manufacturing sector for the poor growth. Markets give up their gains after a strong start as growth concerns rattle investor sentiment. The Sensex ends lower by 120 points, lower from the day's high. Power and metals stocks as well as capital goods take a big hit. NTPC's mega stake sale gets a strong response from institutions. The offer for sale gets bids worth 20,000 crore rupees against the government's target of raising 11,500 crores. Most of the bids come in around the base price of 145 rupees per share. No respite for telcos. Vodafone's India's revenues grow just about 9% in the December quarter. The company blames low call rates and the tough regulatory environment for the poor show. European markets edge higher ahead of the EU summit. Leaders will begin a two-day summit in Brussels to decide on the 7-year budget for spending within the bloc. To the top story for today, and we had some macroeconomic data come in, and as pointed out, it was pretty low. You had the government which slashed the growth target fiscal for the current year at 5%. That's the lowest in a decade. The Central Statistical Organization has blamed the dismal farm output and the slowdown in manufacturing sector for the poor growth. The RBI's forecast for the year is 5.5%, while Finance Minister P. Chidambaram has projected a growth of 5.9%. The chairman of the Prime Minister's Economic Advisory Council, Dr. C. Rangarajan, spoke with us earlier in the day. He believes that growth will resume in FY14 in the range of 6.5% to 7%. Meanwhile, Montek Singh Ahluwalia, Deputy Chairman of the Planning Commission, feels that the latest forecast is incorrect as the CSO doesn't have enough data to rely on. Let's hear them out.
I think the full impact of the various decisions that have been taken in the last few months will be seen in the next fiscal. The change in investment sentiment will also result in action in the next fiscal. I would still think that the growth rate next year could be in the region of 6.5 to 7%.
What they've got as an advance estimate is based on projection. I don't think they have full data. I don't even think they have full data for November. We know that the economy was slowing down. I mean, most of us felt that perhaps it was beginning to bottom out somewhere in October, maybe in November. So the real question is there a turnaround or not? If you assume to make a linear projection assumes that there is no turnaround. I don't think that's a very reliable way of looking at the situation.
Meantime, analysts were a bit split in the latest GDP forecast. We spoke with Devendra Pant of India Ratings, who believes that given the slowing growth, the government may stick to the fiscal deficit target. Nishchal Maheshwari, on the other hand, believes that the government will manage to bring down its expenditure and thus meet the deficit target.
The second half of this fiscal, the average growth will be something around 4.6%, which is, if we look, forget the 5 at 1 for a moment, the second half growth of 4.6 is really very bad. The government expenditure, which was 11.6% of the GDP last fiscal, is going up to 11.8%. Either the 5% real GDP growth is not correct, and if this is correct, then the chances of restricting deficit to 5.3% will be a tall order.
It's a bit surprising given that we have been for the first 6 months around 5.4%. So you are effectively saying that the remaining 2 quarters has to be lower than 5. Given that this is the first year of the 12th 5-year plan, wherever the allocations have been made also the same amounts are not actually utilized. Government will be able to save on the expenditure side, especially on the capex, and might be able to achieve a 5.3, 5.4% target.
That's some expert opinion on the GDP numbers, but meantime, it certainly did have its ramification on the equity markets. They were trading in the green, but on the back of that number, they too edged low, and by the end of the day were off by 0.3% respectively. Once again, it was a poor show for the broader markets, so take a look as to how they shut shop. The mid-cap index was down 0.8%, a big cut coming in for the small-cap index, down by 1.5% almost. Some of the sectoral movers, well, for the day it was consumer durables and real estate. They witnessed a downtick by the day's close, and all of your sectoral indices were deep in the red, barring IT as well as auto, which managed to eke out just a very marginal gain. So some of the big losers included frontliners like Reliance Infrastructure. Ambuja Cements, ahead of its numbers, was off by 3%. Sesa Goa also was deep in the red, as was the Bank of Baroda, which shaved off 2.8%. Some of the results which came out today, apart from ACC, you had Apollo Hospitals, which put out a good set of numbers. You had the bottom line growth higher by 24% at 80 crores. In terms of the sales also, 856 crore rupees is what they clocked in for the third quarter versus 715 crores. The stock went home with a 3% notch up. CEAT also posted a good set of numbers. You had the profits on a consolidated basis, which came in at 22 crores, a massive jump up from the earlier 8.1 crores. And the top line too saw a growth of 13.3% at 1,238 crore rupees. In terms of VIP Industries, that put out a disappointing set of numbers, and the stock bore the brunt of it. The profits were down by 66% to 3.5 crore rupees, and in terms of the top line growth, that too came in lower at 213 crores versus 223 crore rupees. Some stocks in focus today. Take a look at Strides Arco Lab. There's been a lot of news which has been brewing around that one, but the fact of the matter is that it fell flat on its face today, supported by pretty hefty volume activity. Although it managed to recover from the day's close, there are reports that perhaps, in fact, there's a news buzz that its plans to sell Algea to Pfizer might just be put off. Mylan may perhaps be in the race for the same. From the pharmaceutical pack, you also had Cipla, which took a big knocking as brokerages turned bearish on the stock post its weak show of numbers. You had CLSA and Morgan Stanley, which downgraded the company, citing slower growth prospects as well as weaker margins going into the coming quarters. Hexaware was up on a brokerage upgrade. Nomura upgraded the counter to a buy from a neutral rating, upping the target price to 105 rupees, saying that they expect strong earnings growth and significant margin improvement. On the other hand, Manappuram Finance plummeted a good 8.5% almost, as the results were below street estimates. Margins came under pressure on NII moderation, and remember, it was the worst performer on the BSE 500 index. Suzlon too, that counter witnessed quite a bit of selling pressure, as they may sell a stake in the company in order to pay off their debt. Godrej Industries put out its numbers yesterday, post-market hours. The profits came in higher by 111% at 179 crores, and the top-line growth was steady at 17% at 1,680 crore rupees, and the counter witnessed good buying activity. TPZ from the jewelry space, though, that was down by 5% by the day's close. The reason being the numbers. On a quarterly basis, there was a dip in the sequential profit, coming in at 24 crore rupees versus 60 crores. And in terms of the top-line growth too, that was lower at 574 crore rupees. JK Lakshmi Cement, a similar pattern. You had the bottom line growth, which was down 16% at 41 crores. And in terms of the total income, that inched up by 12% at 494 crore rupees. But the stock was down and out by the day's close. Let's pull up some of the gainers then in today's session. You had Power Grid, which inched up, IDFC, M&M ahead of its numbers, as well as TCS. That counter was in the limelight on the upside. Well, that's pretty much how the equity markets panned out. So, but some important news coming in on your screens with respect to Indiabulls Finance. We understand that they will be selling 75 lakh shares via a block deal tomorrow. Now, sources indicate that the block deal is going to be priced in the band of 283 to 298 half rupees per share. The block deal size can be raised to close to 1.5 crore shares, and it can raise close to 448 crore rupees. Sources also indicate that Bank of America Merrill Lynch is the banker to that block deal. So that's some exclusive source-based information which is coming in on your screens. With respect to that block deal, once again, the price band is 283.6 to 298.5 rupees per share. There will be quite a bit of activity on the stock price tomorrow. Let's just get a quick glance as to how it shut shop. Today it was in the red, but watch out for the activity on the counter come tomorrow on the back of that block deal. Let's get in some expert market opinion on what the road ahead is for the equity markets.
Markets are looking for a direction. Markets are looking for implementation of the, what government is intending to do. The correction might remain might still be there for some more time, I think, and I am not sure whether it will be a significant value correction or it will be a time correction, but I see market consolidating around these levels. As the environment is turning back, you will see the trade of, high beta, long and sort of defensive short or underweight.
We could probably expect even the rupee to start turning favorably, or started weakening out maybe later post the budget come April, and that could be good for the IT companies as well. So yes, but selectively on a bottom-up basis, you would have to choose the companies that have sounded much more confident than the rest of the pack.
Another stock which hogged the limelight today, it was our big story for the day. NTPC, that mega stake sale, got a very strong response from institutions. The offer for sale got bids worth 20,000 crore rupees against the government's target of raising 11,500 crores. But let's cut across to New Delhi where Ravi Mathur, the divestment secretary, is speaking.
Shares of NTPC Limited, a Maharatna CPSE engaged in power generation. The shares were offered through OFS mechanism of SEBI. This constituted 9.5% paid-up equity capital of the company. The floor price of the OFS was fixed at rupees 145 per share. The OFS opened on BSE and NSE at 9:15 a.m. and closed at 3:30 p.m. today. While the details are being worked out by NSE and BSE, and will take a long time, at the close of the offer, and will take a little time, long. At the close of the offer, the total demand received is for 132 crores 84 lakhs 55,690 shares at an indicated price of rupees 145.91. Thus the offer has been subscribed by 1.7 times approximately. The details of the exact realization will be received in due course of time from the stock exchanges, but and only then will we know the exact amount realized in this offering. The government is satisfied with the response to this offer. Thank you.
You said that we know the exact amount in a while, but where do you expect the approximate mop-up? How much?
More than 11,500. It will be about more than 11,500 crores.
So with this, you are going to achieve about 80% of your investment target. For the rest, is it going to happen before the budget, or now do we see the other issues coming only after the budget?
No, there are some more issues planned for this fiscal, and our effort will be to bring those issues.
So, will we do NALCO this month now? Will we do NALCO this month now, sir? Is that on the horizon?
No, we'll let you know which issue we are. It is too early for me to indicate which issue will come next. However, we'll let you know in due course.
What is the company you are working on currently for this arrangement?
See, whatever action plan was set for this year, we are working on all those companies. Which company will come first, which will come later, for me it is very difficult to say at this stage.
Not first, until which companies are you working on for the current financial year? The company which could name them.
What are the companies?
NALCO, Steel Authority.
NALCO, SAIL, Rashtriya Chemical and Fertilizer, MMTC, Steel Authority.
Approximately 4. So the same number of issues you have for the next financial also?
See, we are yet in the stage of formulating the plan for next fiscal. I am meeting the secretaries of respective departments. So once that plan is finalized, then we will.
So specific to NTPC, I don't know if the numbers are out yet, but you said 350. So could we at this point of time know what's the highest bid that we got for NTPC?
I have not been informed as such, so I can't comment on that.
Sir, any indication of investors?
No, these details we'll know later. It is too early.
What kind of participation have you seen from foreign investors as well as domestic investors, and more importantly, retail investors?
There's a good participation from foreign institutional investors, and I think we had intimated that there's an FII who had bid for more than 1,000 crore shares very early in the day, and after 2:30 p.m. large orders from various FIIs had come in, and generally they were in the range of $50 million to $100 million.
$50 million to
$100 million.
So how much did LIC and SBI subscribe to this issue?
I am not aware of that. Frankly, till I get the institution-wise breakup, I can't.
So mainly it's FIIs who have shown the maximum interest and
FIIs came in towards the end, and generally they bid in after about 2:30 p.m. But there was some good responses early in the day also, which I just mentioned.
So you had to be...
Domestic as well as foreign.
And so around 27,000 crores is what we are expecting, tentatively, I mean, roughly. So if you can just repeat that answer once more on the participation for FII. We can't catch your voice in that. So if you could just please repeat the answer on the kind of FII participation you saw and the retail participation you saw.
The OFS mechanism is not typically suited for large-scale retail participation. As far as the FII participation is concerned, there was a good response right from the initial part of the day, when an FII came in with a large order exceeding 1,000 crores. Then the order inflow from FII started later in the day around 2:30 p.m. and the orders were large, typically $50 million to $100 million. But the exact proportion of how much FII participation and how much domestic institution allocation has been, we'll know only by about, I think, 6 p.m. to 7 p.m.
So you had two big issues, Oil India and NTPC. Over the next, say, 2 to 3 weeks, do you think there's going to be appetite for more government paper, or do you think you now need to give it a break for at least a month before you start again?
See, if these two issues are any indication, there is an appetite in the market for more offerings.
You said there will be 200 million or billion?
Million
dollars. Good appetite for Indian paper.
It is obvious with these two issues.
For Indian PSU paper.
Or Indian PSU papers.
Well, the issues which will come henceforth will not be of this size till March. So we don't have that.
This was
one of the largest
issues.
But ma'am, MMTC and NALCO...
No, they are much smaller issues. Not of the size. This book was a huge one.
Okay, thank you so much. Thank you.
Okay, the government is satisfied with the response of the NTPC OFS, and rightly so, given that it has got a resounding response. The OFS has got bids for 133 crore shares versus the issue size of 78.3 crore shares, and as indicated, the indicative price band was close to 145.9, which is very close to the price set at 145 crore rupees per share. And of course, they said that they've not yet formulated the divestment plan for the next fiscal, but they hope to bring NALCO, SAIL, RCF and MMTC issues. With respect to the FII participation, can't really be a certain, but they have seen a good response from that side, close to 100 crores and close to 50 to 100 million dollars in terms of the orders were what was seen from the FIIs, and good response also from the retail and DIIs in terms of participation for NTPC. Well, we saw how the stock shot sharp. By the day's close, it was in the red, but of course an overwhelming. From the cement pack, you had ACC, which delivered a poor set of numbers just before the markets were closing, with the profits down about 45%, coming in at 251 crore rupees. In terms of the top line growth, that was absolutely flat at 2,691 crores. Let's get in Navneet Saluja, who's here with a detailed review on the ACC numbers. Navneet.
Hi, Avan. It was an extremely bad set of numbers for ACC. If you look at the top line, as you mentioned, it was flat and the PAT was down by 45%, but that was essentially because there was a tax credit in the corresponding quarter, but still the PAT figure has been marginally below our estimates. And if you look at the EBITDA, that's down 8%. That's again below the estimates. It's come at about 392 crores, and the margins, as expected, they have fallen by about 150 basis points. If you look at the other numbers, the freight charges have risen as a percentage to sales by about 150 basis points. Your other income this time around was up by 44%. The finance cost was also up by 42%. And if you look at the sales volume for 2012, they were marginally up only 1.6% when compared to the previous year. So overall, the numbers have not been great, essentially because it has been a weak quarter for the entire cement industries. We've seen all the cement companies which have come out with their quarterly numbers. The numbers have been below the estimates.
Okay, a disastrous show, high freight charges as well as other income. But Navneet, we're also expecting Ambuja to put out its numbers. What is the street going in with?
Well, Avan, no surprises expected from Ambuja as well. If you go by the ET Now poll, we are expecting the top line to grow by 8%. The PAT could come higher by about 4%. We are looking at a PAT figure of about 314 crore. Again, in the case of Ambuja as well, there was a tax credit in the corresponding quarter, so we need to adjust that. Post that, you can expect the PAT to be higher by over 30%. Talking about the operating performance, yes, it will be impacted again by higher freight charges, and because of that, you will see the realizations too coming off. But in case of Ambuja, the margins are expected to be stable because Ambuja does not have that much presence in South India, where the demand was extremely sluggish during the quarter. So margins are expected to be at about 20.05%, and realizations and EBITDA per ton sequentially will fall because you saw the cement prices falling sequentially by about 3 to 4%.
Okay, thanks very much, Navneet, for giving us that perspective as to what we can expect exactly from Ambuja. But more bad news for the telecom sector as British telecom giant Vodafone India's operations clocked in a mere 9% increase in the services revenues on a year-on-year basis. The company said that in the quarter ended December 2012, regulatory changes have had a negative impact on the operations, resulting in a negative growth of 2%. The company says that its data revenues grew by 23.8%, driven by an increase in customers taking data bundles as well as an increase in the 2G data pricing. Vodafone's active data customers in India total 33.1 million, including 2.5 million 3G subscribers. A check on the stock price of Vodafone PLC as we speak, it's trading higher by close to 2% at 174. But moving on then and staying with news from overseas, the European leaders will begin their two-day summit in Brussels later today to decide on the 7-year budget for spending within the bloc. The member states failed to reach a consensus over the budget the last time they met in November. And you can see the European markets ahead of that very packed schedule in terms of macro events that will be kicking off today, seeing a bit of a mixed bag. In terms of the frontliners, the FTSE is up marginally, as is the CAC and the DAX. Some of the peripheral markets, particularly Athens, is down in the session. But let's take it across to Kimberly Lim, who now joins in with more details.
Well, it has been a while in the making, but the expectation is that EU leaders will reach a deal on the bloc's next 7-year budget at the Brussels summit. Now, officials preparing for the meeting say they expect the budget to be fixed at about 955 billion euros, a net reduction from the previous budget. That's, of course, despite ongoing differences between key players. Germany and Britain's conservative stance is looking to limit future EU spending, and that's compared with others like France and Poland, resistant to further cuts. Ultimately, though, analysts say the expectation is a deal will be reached, because failure this week would likely delay a decision for at least a year, putting on hold much needed investment in new infrastructure, research and technology.
Okay, so that's a packed calendar when it comes to the European markets. But on that note, we wrap it up right here on Business Day. Thanks so much for watching.